Financial Argument. Follow us on YouTube.
Now, we are watching the global economy deteriorate very, very quickly. And we're getting more and more indicators that are showing that this is definitely happening. Now, we've been following many, many different indicators, and some of them are already showing us in a recession. Some are saying that we're entering into a depression. And we've been watching retail, well, that has been imploding like there's no tomorrow. We also see out in the Eurozone, out in the UK, that things are not going well. Right now, consumer spending growth in the Eurozone, well, it's likely to slow this year, even though they're saying there is improvements of consumer confidence, where people are saying that things feel better. But what's really happening right now is that household real income growth, well, it has slowed. And they're seeing higher inflation, and the wages are declining. And when you put these things together, what happens? People don't spend their money. And this is exactly what we're seeing right now. Now, remember, the central banks, they want people to spend. They want people to go into their pockets, go into their savings account, and they want them to go spend this money. They also want you to go into your home equity, take that money out, borrow it, and go spend in the economy, because their biggest problem is getting people to spend their money. They can't get people to do this, and this is a huge, huge problem. Now, what's very interesting is that Best Buy came out and said that they had strong sales. And we need to remember something that many people aren't realizing, that there are many different stores that are closing right now. I mean, one of them is H.H. Gregg. They went bankrupt. And what they're saying is that this is really not normal, because what is happening is their competitors are closing down, which means people are then going over to Best Buy to make a purchase. And what we're seeing right now is, moving forward, that these strong sales that they're seeing right now, well, it's not going to be the new normal, because once again, as these companies go out of business, as more people lose their job, that traffic is also going to dry up, because we're seeing it happen all over the place. We see that many, many people are not purchasing homes right now. Now, if we take a quick look at the U.S. housing, we're seeing that it's slowing. Wages are only growing by 2.5%. Houses are increasing. Their prices are growing by 5%. And what is happening here is that people can't keep up with the inflation in the housing market, because their income is not keeping up with inflation. Now, if we look at the data, we can see that there are different cities that are easier to purchase a house, and there are different cities that it's much more difficult. And when we look at this, we can see the difference here. Now, when we're looking at this chart that I have on the X22 report, if you're on YouTube, you can see the chart. If we look at Seattle, for instance, well, this chart shows how much household income increase is needed to buy the median priced home in the U.S. cities. So if we look at Seattle, we're looking at a number of about 14% or so, very close to 14%. If we look at Portland, we are looking at 8%. If we look at Dallas, we're looking at 8%. Las Vegas, we're looking at 8%. Miami, we're looking at 4.5%. So what we're seeing is that these individuals, well, they're going to need a lot more money. Their wages are going to have to go up to purchase a home in these areas. And there's all these different cities that are listed, and it's becoming very, very difficult for people to basically afford a home today. This is why we see the housing market, well, it's in trouble. It's not doing well. We see that foreign buyers, they are pulling back, especially from China. And we can see that the everyday American, they're not purchasing homes. And in many different cities, and I'm not talking about the Case-Shiller 20 cities where they're able to pump that up, but they can't do it in every single city in the United States. But if you go outside of this area, you know, and you can see, if you go onto Zillow, if you go on to Realtor.com or any of these sites, you can see that people have been trying to sell their homes, and they just can't move them, and prices are coming down. Traffic is drying up. We saw this back in 2007. And the following might explain why this is happening. Now, according to the data from the U.S. Labor Department, the percentage of Americans in their prime work years between the ages of 25 and 54 who actually have jobs, well, they're still way below the level prior to the 2008 Great Recession. Wage growth has been stagnant. On top of that, debt levels are hitting record highs. Student debt, consumer debt, auto loan debt, and the rest, they're hitting record highs. People are once again unable to pay their debts. Over the last 12 months, for example, Capital One's net charge-offs increased by 40%. Cash levels are also incredibly low. And we can see that many Americans, they just don't have enough money. Now, let's see how much money people actually have. According to Bank of America's annual report from 2016, it shows that the bank has $592 billion in consumer deposits from 46 million households. That works out to be an average of about $12,870. Now, that's not per person, that's per household. Now, this includes everything from savings, investment, and retirement. Now, if we go back 20 years ago and we look at Bank of America's annual report, it showed that the bank had $392 billion in deposits from 30 million households. That works out to be $13,067 per household in 1997. So today, people are saving, or they have less than they had in 1997. And this is 20 years later. And if you tack on inflation on top of this, which means the dollar value is decreased because you need more dollars to pay for that product or that service, they don't have, or we don't have, that much money. This is the problem. And remember, this includes investments, which a lot of people can't touch right now, retirement, which a lot of people might not be able to touch right now, and the savings. So you know the savings part of it is much, much less. Now, Bank of America is out there, and they're saying that this could get ugly really, really fast. Now, what they did is that the Bank of America credit team, they did something so few finance professionals bother to do these days. They looked at fundamental data to reach a conclusion that is independent of how much the Apple stock from the S&P will have to buy to send the Dow Jones green. Specifically, the bank looked at the liquidity situation in the bond market and found that while for the time being there is little to worry about, once the central bank's put melts away, that's when the real test will take place. And according to Bank of America, they're saying that this could get ugly pretty darn fast. And what's very interesting about what's happening in the stock market, what's happening in the real economy, that we see these patterns repeat over and over and over again. Now, we don't have the crashes at the same exact time. Sometimes they're able to manipulate the entire economy for a longer period of time because they learn from their mistakes and they keep adding to them to make sure that they can manipulate every part of the market. And this is what we're seeing right now. But what's very interesting is that according to the latest Conference Board survey, 80% of Americans surveyed believe that stock prices will not be lower in the next 12 months. Now, the last time the nation was so convinced of the market's permanently high plateau was in the fall of 2007. And guess what happened? Everything fell apart. And this is what's going to happen again. They've created this illusion that everything is great, that many speculators, they are long the Dow futures. They believe that this will never end. And they did this back in 1929. They did this back in 2008. And there were many, many people that lost out on this. And this is what we're going to see this time, because you know that this all can't be sustained. The economy is breaking down. Retail is a disaster. Housing is a disaster. It is imploding on itself. The GDP numbers are fake and manipulated. The unemployment numbers are fake and manipulated. The stock market is completely manipulated. We have central banks around the world buying all the different stocks to keep everything propped up. And they don't have to buy that many. I mean, the FANGs, all they have to do is buy a couple of them, and it looks like everything is doing really well. And this is what they've been doing. But as we can see, that eventually what is going to happen, people are going to be scratching their heads saying, okay, these companies are not bringing in revenue. They're not bringing in sales. They have no more plants to close. They can't lay off that many more people right now, or the company cannot operate. They can't buy back their shares because they don't have enough funds. So their earnings are now dropping. The revenue is now dropping. The sales are now dropping. Do we really believe what this market is doing right now? And we are entering this territory. And we can see that many of the corporations, I mean, how can they be doing well if more and more retail stores are closing? Remember, online sales are only about 8 to 10% of the brick and mortar retail business. Because this is a $1 trillion business. When they tell you that, oh, Amazon just made $10 billion for their their online sales, it's nothing compared to the brick and mortar business of retail. And we can see right now we're coming into the holiday months once again. Last holiday, it was a disaster. That's why all these stores are closing. What do you think is going to happen this time around? Because they depend on the holiday to push them through the whole part of next year. If they do not do it, if they don't get the sales, you're going to see, forget 8,000 stores, you're going to see like 17, 20,000 stores close. And it's going to be a complete disaster. This is where we're headed right now. Do you really think all of a sudden it's going to improve? No. It's impossible. Think about all those people that are going to be losing their jobs in the retail market. They can't find jobs once again in the retail market because a lot of stores are closing. There's just not that many job openings. A lot of people have lost their jobs in high-paying positions, and they're working 2, 3 part-time jobs. So the automobile industry is in trouble. The retail industry is in trouble. We have a lot of manipulated and fake numbers. This is going to be a disaster. This is the ugly truth of the economy, of what it's really doing right now. And yes, this is a slow grind to a major disaster. I mean, all we're waiting for is some type of an event, the stock market to come down maybe 25%, then all hell breaks loose. That's all it will take. Where companies have the excuse to say we got to lay off, close these plants, sell these buildings, do whatever we have to do, and it'll be all over the corporate media, and the whole thing will be a complete disaster. This is what's going to happen because we know as we move forward, the situation is just going to get worse and worse and worse. We've been tracking this for quite a while, and we can see that there's been no real improvement. Yes, there's been improvement in the manipulated numbers, but there's been no improvement in the hard, real data. It's not like, ooh, look, Radio Shack just opened 1,000 stores. Best Buy is expanding. Macy's says, wow, sales are so great, we're going to open 10 more stores. This is not happening. The opposite is happening. And everything is contracting, and it's still